How you doing? My name is Alex Carlucci with Gustan Associates. Going to talk to you about mortgage rates. Are we concerned about mortgage rates? It's on the news every day. This is June 2019 and mortgage rates are dropping, which is going to help everybody's mortgage payment and which is going to increase what you can qualify for. So generally in a decreasing mortgage market, rate market, you're going to see people's qualifications for mortgages go up. Therefore, you're going to see prices go up of homes because now more people can afford that $300,000 house. The pool of people all of a sudden increases because they can buy because the rates have gone down. So when rates go down, your principal and interest part of the payment will go down. So it's not as much as you think, but for every $100,000 and for every eighth of a point, it's $8 a month. So if you save a half a point on a $200,000 loan, it's roughly $80. That $80 is going to get you about 1/10, let's say about $18,000 in purchasing power. So what tends to happen is when these rates come down and people were looking at a $350,000 house and they couldn't buy it before, now they can, and you'll see a lot more activity. So that's how mortgage rates really affect housing purchase and housing payment. You're also going to see a lot of refinancing going on, which is good for our economy because people have more money in their pockets, they're going to save money, and then they're going to go out and spend money and get the economy going. So lower rates have a huge effect on housing market in terms of purchasing, housing refinance in terms of saving money, and the rest of the economy for all the extra cash in their pockets to go spend on anything, going out at night, dinners, remodeling their house. Also, when people are buying more houses, it's triggering furniture sales, washers and dryers, paint, all the good stuff, rugs, TV sets, entertainment centers, bedroom sets. So everything starts to happen. So mortgage rates are a very, very crucial part of our economy, and we always like to see them go down. And mortgage rates are tied to what I watch on a daily basis is the 10-year note. And the 10-year note you can always watch on CNBC, and if you want to watch the markets on CNBC, you'll see that mortgage rates are what they're doing every day. They're talking about them every day, usually every 15 minutes. They got a little ticker in the bottom. So they don't track anything exactly because mortgage rates actually move on what's called a mortgage-backed security. And the 10-year note is a 10-year treasury that the government offers to people, the public, to lend to the government so they have money to fix the roads and they pay you back in interest. So the mortgage rates actually have their own little thing, but it's much more complicated to track that versus someone like you just looking on the TV and seeing that the 10-year yield, which today is at 2.12, if you see that go down to 2.05, that means the rates are probably going to get better by an eighth. So it's going to save you $8 for every 100,000. So you want to see that going down if you're in the process of looking for homes. You don't want to see it going up. And a lot of people, when they buy a house and they're really sensitive to these rates, again, it's only $8 for every 100,000. So don't get too caught up in floating it and stressing yourself out. Like, oh my gosh, I want the 4 1/4, not the 4.375. It's going to be everything to me. It could be like $16 a month, which over 30 years is a lot. I'm not saying it's nothing, but don't haunt yourself over rates when it comes to buying the house. You buy the house and you're happy with that payment, just lock it in and just don't stress yourself out about the rates and watch them every day just to save that money. It looks like a gambling disease. So try not to do that. It sounds funny, but that's just lock in your loan and don't worry about it. You pick this time of the year to buy the house, just go buy it. Don't think about the rates. But do think about the rates in terms of your affordability. So again, when rates go down, your affordability goes up, and you can buy more house. And just talk to your mortgage broker about it. You give us a call here at Gustan Associates, and hopefully that helps you guys out. Leave any questions below. We'll get back to you. Please like and share this. Thank you very much.